Alrighty, good morning, everybody. It is Wednesday, February 26th of 2025. We're going to jump back to yesterday. I think there was some really good examples of basically shorting a heavy market. And so we're going to look at some of the opportunities we had yesterday as the market started to sell off out of the open. There's an echo. Don't know how there would be an echo. Still have an echo? Or do you mean like the room I'm in is echoing? Okay, there might be something weird on Neil's end. Good? Okay. So let's go back here and set the stage for the setups here. So again, I wanted to talk about how I go about fading a market that is selling off. And as you can see here, this vertical line is where the market opened yesterday. And pretty much within a couple minutes of the open, the market started to sell off, right? So we were here. We had some clues for the bulls from the overnight low, which was, by the way, to the tick off our roadmap level yesterday, or at least in the pre-market there yesterday. And we said, hey, we have clues for the bounce. They did push about 30 points from the scene of the signal. And for all we know, that could be the end of it. But if they do pull back this morning and they can stay above some of these key levels, that was a clue. And obviously staying above VWAP would be the first sign, at least on the shortest time frames here, that maybe the bulls were going to continue. But as you can see out of the open here, zoom it on in, they popped up a little bit. They tried to push through the close of the day before. And this is such a common thing to see in the S&P, is when we open, whether it's really far away to the upside or to the downside, a lot of times we will go right back to the close of the day before and get a pretty notable rotation right off of it. Doesn't happen every day. Doesn't have to happen, but we do see it happen really often. So in the open here, you can see, I mean, there actually was a short opportunity right out of the open. We came up and tested the little high that we made before the market opened there, got a bearish divergence, and got the pullback. So, I mean, quite literally within a couple seconds of the open, fading the first level we have on the chart should have given you a nice, almost a 10-point pullback. But then as you can see, they come up and then reject right off the previous daily close. And then that's it. We get the crossover right here. So if you're watching the market and it's opening and it's just kind of petering inside of that last leg of price action, probably a little bit more risky to orient yourself one way or the other. But as the market starts to show its face, we break we push to a new low for the morning as the open. We get the crossover of our moving averages, and price starts trading down below VWAP there. Well, now it does kind of look like maybe there will be a deeper pullback, right? Doesn't have to happen, but sure enough, and as you can see, I'm not talking about trying to find a short right here. There wasn't too much conviction to the downside until this type of action started to happen, right? So it got really heavy on the bearish side. And then from there, I'm arguing the first good setup was the retest of the back end of that roadmap level. So what we had was a really strong heavy market pushing through a lot of our key support areas. And then we get a bounce, again, one tick in front of the roadmap level, to come up into this where we have a previous swing. So if I have a level, I have, say, a previous price structure like a swing in the market, and I'm kind of technically pushing up into the back end of the VWAP or the fast moving average. Technically, because you can see it did kind of push through. I did think there was some good edge to that area for a potential pullback. As you can see, I did get stopped out, and then I jumped on the other side as I started getting clues that this was most likely going to come right up to here. So I did reverse, get in, get a like a 5-pointer up just in front of this area, And then as we tested to the 200, I did notice obviously the first pullback there was probably where I should have entered, but I was exiting my long. So there was a really good short off the back end. Now, just like this setup here, we're now looking at a level coming into confluence with a major moving average. And we're in this orientation, right? We've got the bearish crossover. We are obviously sloping lower on the two moving averages. And then as we push right into the 200, this is a textbook trade I teach, we get a divergence. You can see it very clearly here. So there was an opportunity there. Now, if you miss the entry right there, look what happened. We peaked up just a couple ticks more, right? We're not talking 5-point bounce through, but just a tick or two up through the high. And when it ticks up to that new high, we get this even stronger extreme divergence. So when I saw that right there, that's what alerted me to, hey, this is a very, very textbook peak above and fail off of the 200 in a bearish orientation on the short time frames. So from there, I did get in and was able to get a pretty good sell-off from there. And then as we got down through the morning low, which was our roadmap level to the tick, we had, again, this confluence of the fast moving average, the roadmap level, and the previous swing in the market right there, right? So as it came up into that area, again, my entry was right to the tick off of 70.75, and I think it went through by a tick. So it filled me, and then I got another pullback and was able to get another almost a 10-pointer. I took it off at 61 and nailed the low before it came right back to my entry. So you can see here that these type of setups, trading the back end of a roadmap level, seeing divergence forming, and then if we do have some structures in the market bolstering that area, even better. And you can get in. Now, it didn't have to hold from the roadmap level. We very well could have pushed right through. But you know you're right within a couple ticks, because just to show you here, not cherry picking anything, every time we pushed up into one of these areas, if it was going to hold, it held within a point or two, right? Right into it, hold within a couple ticks. Right into it, hold with a couple ticks. Right into it, hold within a couple ticks. So we know that we have edge off of these areas, and we know we have limited risk. So even if it went through, I was willing to take a small stop out. And again, targeting down to that next roadmap level, taking profit in front. Now, these are some of the trades I took, and then I was done for the rest of the day. But you can see that we had, again, that tag of the back end of the 200 in the roadmap level here with a big bearish divergence. It did fail one tick in front of the level. So whether you got filled or not, I don't know. But then here's the same setup again. As we continue, and remember, this is an aggressive bearish market we're trading. This is kind of the lesson for today. Trading a bearish market, aggressive bearish market, I should say. And then here's that same setup. We get through the lows of the morning. We come back up. We test them. But not only are we testing the major low, we do have an area of edge right here, right? We have our roadmap level sitting right there. And then we have this big bearish divergence as it's testing into that area. So again, another very limited risk opportunity that then gave you a push right down to, notice the trouble here, the next roadmap level here where it almost bounced, and then right to the next roadmap level where we got the bounce. So you had an opportunity to try a long there, which didn't work out, and then a long here, but the edge was on the short side where once again, and it's quite literally a stair step, and I haven't been talking about that much this year. But if you just look at what's going on here, it's quite literally like one by one, they're just kind of stepping down these levels and holding them to the tick as they push lower. So once again, another to the tick rotation with a big bearish divergence as we test into 50.75 or 50.75 there. Hold it to the tick, get the next pullback where we bounce again, basically to the tick off the next roadmap level. Now this dotted dashed blue line on the chart, that's a 61.8 retracement of the entire push from the January lows. So let me just show you what I mean by that. Let's jump up here. Might need to go to like a 4 hour. You can see from the January lows back here, We got this beautiful leg out, almost came back to the all-time high here back in January. And then we pulled back, and the 61.8 is that dash dot blue line right there. So they came back, they defended it, and then began to push out. We almost pushed back to the all-time highs just a couple days ago, and now we failed back out. And that blue line there, the dash dot blue line, is that line I just talked about. So that's the 61.8 retracement of all this price action for the last 2 or 3 months or whatever. So we did come right down into that yesterday, kind of peeked through it a bit, and I think that was it eventually, and we bounced out. So they did kind of retrace all the way back into the 61.8 yesterday. Again, just pointing out that's what that level was. But as you can see, the more important stuff here was the roadmap levels. There's that short I mentioned. Then we held the bottom end here. And then they came down and tried to get down to below the next roadmap level, where again, it kind of held and held and held, and then got through it and held it to the upside for the bounce, right? So it came up, and really the lesson is over with now. The shorts were all of these setups off the back end of the roadmap levels with divergence and sometimes getting some confluence with some of the last major swing highs or lows. But then I just want to mention here, just as a quick review for the rest of the day, just blows me away that we come all the way up, come right back into the 59.75 roadmap level area. We even had a unofficial level there at 62.5, comes right to it, drops out, bounces again to the tick off the roadmap level, and then rejects nearly to the tick off this roadmap level to push lower. And then the low of the day, my friends, was the next roadmap level, where, by the way, if you were looking to find a counter trade setup, you had a very, very, very beautiful bullish divergence as we were testing into that area. So if you recognize we had a typical peak below and bounce with a beautiful bullish divergence, and you wanted to jump in, you then would have nailed the low of the day, and you got your textbook retracement to jump in right here, where we got the push out, came right to the 50% retrace, which was the FMA. And when we came down there and made that low, we got ourselves a beautiful bullish divergence. So testing the 50% bullish divergence FMA, if you were using this as your clue that this could be the low of the day, and you enter on the 50% retrace of the first leg out, well, you got in, and then that was it, right? So again, you could have bought the pattern down here off the roadmap level, understanding that you didn't have to take more than 2 to 3 points of risk down there, or you could have waited for that nice impulsive move out, the retracement, getting in off the FMA, and then riding the whole puppy back up. So again, the low of the day yesterday, what do you know, is our roadmap level basically to the tick. And then as you can see, we get a big, strong recovery. They pull back into this roadmap level here for the bounce, fail off VWAP, and then hold the roadmap level again to come all the way out. And geez, just keeps on going here. So we get to the end of the day, and you can see here from the afternoon, it just gets choppy. So we still hold some of these roadmap levels almost perfectly for these rotations in here. And I can see inside of the chop here some really awesome opportunities. These pullbacks into the 200 in a breakout, taking it to the tick, and then getting yourself a 20-point push to the next roadmap area. This pullback here, getting long off the roadmap in the 200 for the pop, fading the back end of this roadmap level here. So there were so many opportunities in here, but again, a little bit back and forth and choppy. You had that opportunity to buy the pullback here with bullish divergence. And then at the end of the day there, the pullback and then the hold right off the 200 there. Textbook stuff that happens day in, day out here with a big bearish divergence for a short later on in the day. So remember, once we start to get the sell-off, we get the crossover of the two more aggressive moving averages. There's the tag in the back end of the roadmap level the first time, and then the second right here off the 200. So again, beautiful little opportunities here at the end of the day. And then that's kind of how everything ironed out. Still holding the back end of this roadmap level for the pullbacks. And then once we get above a long there, right in the last couple of minutes of the day, big bullish divergence, pull back to the FMA and the roadmap level on the previous swing, and you got in off the FMA for one tick of risk and got that last 5-point pop at the end of the day, where again they pulled back and bounced off of it almost perfectly. So that brings us here into our overnight session, where we might as well just take a look at what happened here. And as you can see, oh my lord, beautiful, beautiful long opportunity last night, pulling back right into 200 moving average, the roadmap level, and getting yourself a beautiful bullish divergence as we're testing into the 200 there. So if you were last night, not too late, last night, especially if you're on the West Coast, there's your long to the tick, taking on no risk, and then you should have been able to get way more than 10 points to the upside last night. So great opportunity right there. Pulls back and holds the FMA on the first push out. And then we get right to 6,002 here, our next roadmap level, where for quite a long time they have trouble. And now, as you can see, we're pulling back from there. And just in the last couple of minutes here, we actually had a beautiful opportunity to short the back end of the Holy Orange power level here. Admittedly, not the most sexy divergence going on off that second swing high, but we do have that textbook pullback right off of it. So that concludes that review and that little lesson on how to fade a heavy market. Let's go ahead and jump up to the higher time frames now and see if they have anything new to say for this morning.